G'day, my name is Ben Everingham and I'm the director here at Pumped On Property, and in today's video I'm going to talk about how to select a market to invest in. So if it's the first time watching our YouTube channel here, welcome. Please subscribe to the channel or feel free to put some comments down the bottom. If there's anything you'd like me to do videos on in the future, please chuck it in the comments and I'll do my best to get to them for you. But I'm really excited about today's video. We're going to talk about how to select the right market to invest in, and in particular we're going to talk about why markets matter and give you some really direct examples of that. I'm going to talk about timing and the cycles going on in different marketplaces at different times. We're going to talk about the best markets to invest in and what's performed best in Australian history, how to analyse the Australian marketplace right now, and where I'm buying or where I've bought in the future and in the past. So this video is going to be filled with different pieces of gold for you. Hope you get some value out of it, so let's get stuck into it. So the first thing I wanted to talk about is why markets actually matter. So in the old days, before I knew what I now know, and this video is based on, at the time of recording this video, I've bought over $140 million worth of property for myself and for my clients. So this is based on my direct experience of obsessing about the market and always trying to get a slightly better return. But the reason markets matter is because not all markets are created equal. Not all markets have the same population growth. Not all markets have the same income. Not all markets consistently receive the same performance. And an example of this is, let's say for example I have $400,000 to spend, and you know, if you weren't born with a silver spoon in your mouth, which most of us aren't, then every dollar that you have to invest really makes a big difference on where you end up in the future and how quickly you achieve your financial independence. So an example is, I've got $400,000 to spend now, and I'm planning on buying and holding a high quality property for the next 15 years. And my goal of holding that property is to actually hold it for the longer term, hopefully own that property outright and have a passive income for life. So in this one example, we've got two scenarios. One scenario is I go and spend that $400,000 in a suburb or a market that gets me a 4% return per year for the next 15 years. The second example is I go and spend the same $400,000 and I buy a property that grows in value by 6% a year for the next 15 years. And that one decision, while it might feel like a menial decision at the time, and most people don't spend enough time looking at these markets, the result over 15 years of that 4% or 6% compounding in growth is over $238,000 in my pocket of either money that I've made from going the 6% route or money that I've lost or missed out on from going the 4% route. So nobody has a crystal ball and can predict the future, but certain markets in Australia historically have done very, very well over the last 20 years, 30 years, 40 years, 50 years, 100 years, and other markets have done consistently, you know, less well. So it's really important to understand this stuff. The second thing I wanted to talk about is timing. So as we've all seen, or anybody that's been in property for a little while or thinking about markets or been owning their own home for a little while has seen that sometimes things sit flat for long periods. Sometimes property prices do go down and sometimes property prices go up, but generally they don't all go up at the same time, don't all go down at the same time, and don't all sit flat at the same time. And a great example of this is the growth that people saw in Sydney between 2012 and 2017 versus that period of time between sort of 2007 and 2011, where property prices in Sydney effectively sat flat. So certain suburbs continue to perform well at different times of the cycle, or better than the average, but on average the market sat flat and then the market did very, very well. So timing is really, really important, and I'll come back later on in terms of my fourth point, which is really analysing how to identify where different markets are at different points in the Australian market at any point in time that you're looking to buy. So it's important to understand, before I jump on to point 3 there, that timing is very, very important, particularly if you only have 10, 15 or 20 years to hold a property, and buying at the bottom of the cycle where property prices have sat flat for a little while and could rise versus buying at the top of the cycle or in the start of the decline, or at the bottom of the market where things are just sitting flat for a long time, is really, really important. And you can learn how to do this relatively easily. So the third thing I wanted to talk about is the best markets in Australia based on the history to invest in. So if we look at the last 50 years or 47 years, Sydney has gone up in value on average by over 9.5% per annum, as has Melbourne, as has Brisbane. So they've been the top three performing markets in the last 46 to 50 years in Australia. Now, if we go to the last 20 years, the Sydney, Melbourne and Brisbane markets have all gone up on average by over 8.5% per annum. Now, that growth is incredible, and I don't think that growth is actually sustainable moving forward in Australia, because in the old days, property was a lot more affordable in relation to incomes, but that's another conversation, another video, I suppose. So the better markets from my perspective to invest in, if you're a long-term investor who's looking to reduce your risk, to reduce your debt, to get meaningful long-term gains, is a more safer option like your Sydney, like your Melbourne, like your Brisbane. And again, at different times of the cycle, these markets all do differently. I know there's a lot of people that like to buy for different reasons, but they're the three safest markets in my opinion in Australia, because that's where the population growth generally heads, that's where the job growth generally is. They're the three largest cities in Australia, and they're basically self-sustainable now. They do have diversity across the industries in each of those three markets. So if you don't have the money to buy into one of those markets, remembering that Brisbane is over 100% more affordable right now than Sydney, and 60% more affordable than Melbourne at the time of filming this video in 2018. So some of the sub-markets that still might represent long-term value would be the major regional markets surrounding the capital cities. So in Sydney, you're talking about Wollongong, Central Coast, Newcastle. In Brisbane, you're talking about Sunshine Coast and Gold Coast. I'm not a huge fan of Bendigo and Ballarat personally, just because they're very, very different in terms of their desirability, not being on the beaches in comparison to some of the other areas, like your Wollongongs and Central Coast and Sunshine Coast and Gold Coast. But they're some of the other marketplaces that historically have done okay. Nowhere near as good as the capital cities, but well. So the fourth thing is how to analyse the Australian marketplace at any point in time. So one of my favourite reports that I follow religiously, and I've talked about before in previous videos, is the Heron Todd White Month in Review report. And that report basically gives you a snapshot on a monthly basis of where each of the different markets, Sydney, Melbourne, Brisbane, Perth, Canberra, Adelaide, Tassie, Darwin, etc., are at any single point during a period of a month and then a period of a year. So what's really cool, because I'm a visual person, is the fact that it's got this nice property clock, and it actually shows me where each of the different suburbs / markets are at any one point in time. So I like to see that, at 12 o'clock, which is the peak of the market, there'll be these markets, and then, there might be the declining markets which you don't want to touch. Some of the markets at the bottom and the rising stages you might start to consider. So investing in property isn't something that you just buy one marketplace and hold that for the rest of your life. If you want to be a slightly more active investor and make sure you're getting good medium to long-term returns, then buying a stable market's important, but also timing the market and riding that wave of growth up as well can be very important. So that Heron Todd White report's a really, really good starting place. There's also some other great sources of information. RP Data, Tim Lawless over there at RP Data produces a really, really handy market update each month on the big capital cities in Australia and the overall housing market and where things are trending and heading. There's also some great reports from Residex, from Michael Matusik, and from BIS Strapnell. So there's lots of different sources depending on how much you want to spend and what you're thinking of actually doing, but analysing and understanding which market to buy in is half of the journey towards actually achieving what you want to achieve from your property. So when I'm buying personally, which is the fifth and last thing I wanted to talk about, it's a no-brainer for me. It's Sydney, Melbourne and Brisbane at different times of the cycle. As of 2018 right now, I'm really heavily investing into Brisbane. Again, I don't expect it to grow the way that Sydney and Melbourne have previously, but I think over the next 7 to 15 years there's some really good potential up here. So I hope you've got some value out of this video. I've also recorded another couple of videos. This is obviously how to select the right market to invest in, but there's some other crackers on once you've identified which market you're going to focus on. I've done a great little video on how to select the right suburb to invest in, and then once you've reduced it down to the suburb level, how to select the right property within the suburb. So I hope you get some value from this video, and good luck with your investing. For those of you thinking about buying investment property, I do run a buyer's agency, and I'd love to have a one-on-one strategy session with you. That will be either with me or my brother Simon, who is exceptional and knows a huge amount about the Australian property market as well. We'd love to learn more about where you are and where you would like to be, and help bridge that gap, and help educate you on where the market's at and where things are trending, so that you can allocate your funds to the best possible use, so that you get strong long-term capital growth, good cash flow, and potentially, if you time the market right, maybe even some shorter term upside as well. But it's always a low risk, long term strategy with us. Until next time, thank you so much and have a great day. Bye.